What's up, everyone? It's Karthik with MoneyVest. Welcome on board for another Market Open live stream. If you guys can see me and hear me, just give me a thumbs up and we should be all set. Hopefully, there's no technical difficulties with audio issues. I know that some people were facing some audio issues yesterday. So here we are, pre-market, nice little rebound. We've got the QQQs up another 40 basis points. We've got SPY 30 basis points higher, with Tesla also up over 1.5%, and Nvidia is just shy of $108 a share right now, up a little bit over 1% on the day so far. So we're seeing some very nice momentum back up and a nice little technical rebound for both the S&P and the NASDAQ, but this is where we are going to be. QQQ is most likely gapping up a little bit here, pushing up above this resistance, which is now going to be turned into a support right now in the 450s, and S&P 500 is still, I would say, well within that range, and the next resistance and target is going to be all the way up to as much as 55.65 for S&P 500. So once again, thank you so much for joining, everyone. We are ready to go. I'm a little bit tired for this week. I don't know why. I'm just a little bit sleepy, probably because of the travels in the past weeks, especially over the weekend. Taking an overnight flight, definitely not getting enough sleep. So just been a little bit more tired over the last couple of days. But this week I'm excited. I'm excited for this week for sure, because we've got inflation numbers tomorrow. So we'll have a much longer live stream tomorrow at 8 a.m. Eastern. So we'll be taking a look at the CPI numbers. We'll take a look at how the markets react. And as you guys know, that I've got a big trade on Nvidia for this week, and I'll be placing some more options trades today, expiring this Friday. So got a little bit more cash sitting on the sidelines, so I will most likely be selling some puts. Or I've also been thinking about doing a buy right on Nvidia, because the premiums are so good, either on Nvidia or Tesla or even Google. But Google premiums are not that high because it's just been selling off so much. So buy right does not work as well as it does on Nvidia for this week, or even Tesla for that matter. So lots of potential opportunities, and I will be analyzing it right after the market opens. We'll take a look at what is making the most sense, and then we'll most likely utilize that option trade for this week as well. So yeah, hope you guys are doing great. Last week, of course, we witnessed a 4% sell-off in the S&P. The NASDAQ was down over 5%. Starting to see a nice recovery back up. $550-something billion recovered yesterday. S&P up 1%, NASDAQ up 1%. And again, technology continues to underperform, but nice little recovery and a rebound yesterday. And today we're seeing a little bit of that continuation carry forward. So good morning, everyone. Good morning, Karthik. Good morning, thank God for life. Let's get this money, Johnny says. Sargil, let's go. Tesla, good morning. Yes, Tesla, very nice move up. 1.6%, Nvidia 1.2%. And we got QQQs and S&P 500 also very, very nicely up on the day so far. Apple is slipping a little bit pre-market. So if you come over to Apple stock, it is down about 70 basis points after the big event yesterday. I think it was a pretty cool event overall. I think, I feel Apple, as we already did expect, didn't have a lot of changes to the actual phone itself, but I think it's more geared towards Apple Intelligence and visual intelligence. I think some of the features were actually quite cool. Being able to search photos, videos, specific moments in a video, voice control through Siri. I think there's a lot of data that Apple has collected over the years. They've got a lot of data available to them, and they're able to harness that and make it more accessible and make it more useful for the people. And another thing that I think was the biggest win was the PCC, that's the private cloud compute. And again, taking into account the security, the safety of cloud computing, and having it access just in your phone, I think is also very, very beneficial to Apple users. I think those were some of the big ones that I feel were important. And then Huawei, I think, also had their event yesterday after Apple's event. And they also did drop a phone, I think, yesterday. So that's one of the reasons why also Apple might be struggling a little bit. Now, we talked about it on the Discord. I think Apple's philosophy for the longest time has never been to come to market first, right? Timing was never an issue for them. It wasn't like they want to be first in the market. They want to be right in the market. They just want to get it right instead of being the first ones to market. So I think for those reasons, Apple tends to release updates and innovations, so to speak, years, months after they've already been out by other manufacturers. But it's Apple. The marketing's always been on point. The level of simplicity, the level of design detail, everything is what keeps the company at the very top spot, especially when it comes to the US. As we already know, ex-US, Android is dominating the market. And, Apple has very little dominance, especially when you consider India, China, some of these places. But in the US, of course, it's been the top spot for a very long time. Okay. New colors equals desperation. Yeah, I mean, they're bringing back the Jet Black from back in 2007. I actually had that phone. I had the same 2007 Jet Black phone. So I had the 7, then I had the 11, and then I now have the 15 Plus. So I've been upgrading every 4 years. So every 4 years, I feel like you can actually tell the difference if you're upgrading every 4 years. But every year obviously seems a bit too much. If you're going to be spending $1,200, $1,400 every year on a new iPhone, you can also trade in your old iPhone and you can get that number down to, let's say, $1,000 or maybe $900, $800. But Apple now at the very core is a upgrade business. It's not a iPhone business, mostly an upgrade business. Their existing customer base continues to upgrade over and over again with the new technology. And that's really what it's come down to. It's like Apple's been all about, if it ain't broken, don't fix it. What's working, continue to make it work. And that's all it's been, right? iPhone works, keep it that way, upgrade every little bit, every single year, and people are just going to upgrade. So I like to do it every 4 years. I know people that like to do it every 2 years, but I don't know. I don't know anybody that does it every year, religiously. Like, I don't know anybody that looks forward to the new iPhone and is upgrading every single year. People do it, I think, every 2 to as much as 4 years. Some people might even do it for 6 years. And I don't think I've seen anybody have a iPhone which is more than 7 years old. I think the longest I've seen is people have an iPhone which has lasted them 7 years and then they've upgraded. But I don't think I've met anybody that every 5 years, Shashank says, still have the 11. I have the 11, yes. So I had the 11, so I upgraded last year to 15 Plus. And I'm not looking to upgrade until the 19 or the 20. I might do it in 20 now. So iPhone 20, I think I might do it. Unless, of course, in the next 5 years, we see such insane technological advancement that my phone absolutely becomes obsolete. In the next 4 years, then I may consider upgrading. But if you're just seeing these small and steady progressions, then I think the phone is just fine and should be able to last, another 4 or 5 years. Tom says, I have iPhone 8. So 8 to 16, that's 8 years. There you go. First person I've met who's had an iPhone 8 years. iPhone 8. iPhone 8, really? I don't even know what that looks like. I can't even remember what iPhone 8 looked like. Oh no, man, you still have that fingerprint, right? You still have that fingerprint. iPhone 8. That looks old. That looks really, really old. The iPhone 8. Oh. Is it like super slow? It probably is like extremely slow, right? Because that's what happens. Like, I've noticed every time Apple gets closer and closer to their new products and launches, things actually start to become slow. Like my MacBook and my phones and everything starts to really slow down for whatever reason. Next year for me, RT says, we all together and donate your iPhone 20. It's a flip phone. So anyway, yeah, I mean, Apple down about 78 basis points. Checking for him on iPhone 8 Plus, and it's fast. Okay, that's good to know. And iPhone 8 Plus is also, I think, 8 years. So that is, again, 8 years is a long time not having to upgrade. That's pure dedication at that point. Like, that's really some dedication. And if it works, of course, it's perfect. So I had the 7. I think 7 to 11 was kind of a normal upgrade for me. I had the regular iPhone 7. That one, the Jet Black. This right here was my previous phone before the 11, right there. Yeah, reason why they want to push you into into new products. Anyway, so we go into 250, 300 as I stated in your last video. Robotaxi event coming up 30 days. So, I mean, it's a binary event, and it's really just a prediction of whether it's going to go higher or not. It could easily get up to that level, but right now we're kind of from a technical perspective still well within the context of a lower high, lower low. What I'm going to be doing is I'm most likely going to be selling calls on Tesla going into the Robotaxi event, because that's when the premiums are going to be really high, and we're going to be able to get the most out of our shares. Buy us one caddy. Yeah, definitely will. But no, I think every 4 years is a good time to upgrade. I think 4 years is reasonable. 5 years, as much as 5 years, I think is pretty reasonable for that upgrade cycle. But prices are also going up, right? For iPhones, they're also increasing at higher and higher prices. Why why futures are going up so much? Some economic readings were out. Well, I think this is a bit of a technical rebound that we're witnessing right now. If you come over to the calendar, don't think that there is anything that So if you come over to Econ Day here, come over to the calendar. So for today, I think nothing really that is going to be moving the markets all that much. Maybe a Fed member speaking, whatnot. But tomorrow's CPI numbers is really going to be very, very important. So I'll be live for that a little bit earlier at 8 a.m. Eastern. And 0.2% is going to be that consensus. Year over year sitting at 2.6%. So that's what's going to be on deck here. Just got upgraded to $295 today, so that's great. Tesla, $300 is very much a possibility by the end of this year. It's been one of the worst performing stocks year to date for S&P 500, so down a little bit over 13% still in 2024. So we'll see how high it can go up to leading up into that Robotaxi event, and we'll most likely be selling calls very, very soon here. Yeah, I have a 6 and a 9 just sitting in my drawer with cracked screens. Yes, I think I also had a iPhone 6, which was broken. Then I gave it away. Then, of course, had the 7 for 4 years, then upgraded to 11, and then the 15 Plus. I'm happy with this one now. It does glitch out sometimes, though. So Tesla, 220 right now, right on the dot. Nvidia is the stock that I'm watching for this week very closely. I think the best price point that it could possibly close at for this Friday is going to be 109. If it closes at 109, I think that's going to be the best case scenario for me, because I'll keep my shares and I'll keep the entire premium. And then I can, once again, reload for next week. I can sell some more calls at the money calls, 110. Premiums are going to be very, very juicy at those strikes, considering that it's just going to be $1 out of the money. Because the calls that I sold earlier, well, I basically just sold them yesterday, and yesterday when it was roughly around, I think, 106. So just $4 out of the money, and I got like a pretty good $1.65 per contract. If it gets up to 109, right, and then finishes off the week at 109, that's gonna be the best case scenario for the trade that we have on Nvidia. Okay, so Leon says sell and don't come back until the end of October. So, yes, I mean, seasonality-wise, we've talked about how the next 2 months or next 8 weeks really are going to be pretty tough. We started off with a significant sell-off in the first week, but now we're starting to see some recovery back up. And we'll find out if this continues, if this actually rallies further or not. Volatility already on its way lower, so a little bit over 19 right now. So down about 1.7% for the VIX. Yeah, I have 4S back in the day. It's in a drawer with an expanded battery. So thought about playing TLT for September 18th. Not quite. I mean, TLT doesn't have a lot of volatility, right? So TLT, as you can see that, yes, it's been on a very nice uptrend as yields continue to come down because of that inverse correlation, and TMF also doing really well. I would be more interested in TMF going into that September 18th FOMC. However, there's very little risk to reward left, in my opinion, for TMF. I mean, if I were trading this long, There's going to be a huge supply that is coming up to at $66 to $67. And even from an option standpoint, I don't think there is going to be a lot of potential there for TMF. I mean, going into September 20th, if you come over to the puts for September 20th, I mean, we got some reasonable 91 cents for $60 strikes, 63 cents, we got 45 cents, $1.28 for 61, but none of these prices are levels that I would like to own TMF. You know, low 40s, and then of course you get down to pretty much nothing in terms of premiums. So for TMF or TLT, I think these were good trades, earlier this year. But now that since they've moved up so much, the risk reward is not as great as what it was before. So let me know if you have any questions today. I don't have a presentation. I don't have a lot of spreadsheets to go over. I mean, most of the things that we've already discussed on market updates, my brain's quite literally fried over the last week and a half as we've gone through so much data, so much analysis and seasonality and everything. So I just really wanted this to be a very chill live stream where, we take a look at the market. I really don't want to go over a lot of data. I was actually planning on playing music for this live stream as well so that we can just relax into Tuesday. Tomorrow's the big day, CPI numbers, and we're going to take a look at those numbers together. But for today, I just wanted really to be like a very chill live stream where we take a look at the markets. I answer questions if you have anything related to fundamentals, technicals, economy, more of a Q&A basically. Q&A live stream as opposed to looking at a lot of data and presentation and numbers and all that stuff. And I'll also be looking at the options chain because I am really interested in a potential buy rate on Nvidia because the call premiums are so high. But then also looking at Google puts. But Google is not really paying all that much. I mean, I looked at Google premiums yesterday. I guess for this Friday, we've got 145 is paying us 62 cents. So 52 cents is okay, I guess. Really low delta. So I may consider either that or a buy right on Nvidia. But for buy right, I really don't want to up my cost basis because it's now trading well over $108. So it's above my cost basis and it's $2 below my call strike. So that's why I mentioned $109 would be the best price that it could possibly close at Friday, because it would be a bit above my cost basis and below my call strike. So that's kind of like that $2 spread between those two numbers there. So I get to keep my shares and I get to keep the entire premium. But we'll see how lucky I am for this week on Friday. We'll find out. Anyway, okay, so let's see. Do you think the markets will pull back later today pending the data that comes out tomorrow? So that's a great question. I think there is a possibility. However, I just want everyone to focus on the technical levels that we're really watching. And that is going to be the guiding force for markets moving forward. So if you take a look at QQQs, we've been on this sort of staircase pattern lower where, we were selling off, consolidating sideways. Here, let me just draw it again once again. Just give me 1 second. So I'm going to delete all of this. So we were basically selling off, then we consolidated sideways, then we broke down, then we started consolidating sideways, then we broke down, then we consolidated sideways. So really that's been the pattern where it's been bear flag, bear flag, bear flag, breaking down sideways, breaking down sideways. So there's been a staircase down pattern for the markets. And pre-market, since we're up 40 basis points, we're back above this resistance that we struggled to break out of, yesterday. So that's a nice little move back up, but that is going to be that support level and resistance all the way back up to 464. So it's possible that markets gap up here. We come down to sort of retest this level at 454. Then if we bounce back higher, that's great. If we come down to this level, we try to bounce back up and then break down further, then, next target once again is going to be in the 448, 449 for QQQs. So that's what we're going to be watching in about 20 minutes when the market's open. So I don't like to make these predictions, market's going to pull back or go higher. It's just whatever the markets do, we kind of adjust accordingly. And goal for me today would be looking at Google puts or Nvidia buy rights for buying and then writing the calls. Or also even I'm looking at CELH, Celsius. That's a stock that has been selling off quite aggressively. As you can see that it's down from over $90 down over 67%, right? So very aggressive sell-off and put premiums for $27, $28. Might even consider $30 premiums because, again, I'm really looking for Friday. Friday expiration. It's only like 3 days away. So there's not a lot of premium for those. So 32, we're looking at 41 cents. That's actually a pretty good yield, because if you do the math, 31 minus 41 cents, so 41 cents divided by $30.59, we're looking at a return on collateral of 1.34%. 1.34% for just about 3 days. It's not bad at all. So that's why I think, when you're selling calls and puts, when you're running the wheel, I think it's really important to do a lot of research, a lot of analysis on individual stocks, calculate your premiums and your collaterals and everything. It's like, that's what you're trying to do, is you're trying to manage risk as best as possible when you're selling options. So you look at the delta, you look at the premiums, you look at the strikes, you look at the different potential opportunities out there. But Celsius is one of those companies that I haven't done a full fundamental analysis on. I think it's a very good company, as it has been selling off. So it could be worth buying for the long term. But as one of my rules is to only sell puts on companies you want to buy long term, only sell calls for companies that you're okay getting rid of. Okay, coming back to the questions here. Coinbase, let's take a quick look. We haven't analyzed Coinbase in a very long time. What's your take on high yield ETFs CC? Shashank, you mean high yield covered call ETFs? Is that what you're talking about? Let me know if you want to clarify if that is exactly what you're talking about. Thoughts on Palantir, cash to good puts, Howard? So I think Palantir has been ripping up so much that it was beneficial to be selling cash to good puts earlier. Now put premiums are going to be just literally trash because of how bullish the entire stock is. Yesterday up, I think, over 14%. A very aggressive move to the upside. So put premiums are not that great. If you already own Palantir, like I do, I'm looking at selling calls now at this point. I'll be looking at $40 calls or $30 calls. We'll see, what the premiums end up looking like. But in my opinion, I think selling calls is a much better strategy right now for Palantir than cash to good puts. You could sell CSPs as well. Just know that premiums are not going to be that great because of how much it's already rallied. So, it's up a little bit over 68% just from its levels from back in May. Okay, coming back over to Coinbase very quickly. Pretty severe breakdown here. Resistance right over there. Support level I would be watching for Coinbase going to be down to $112 for this company. And it looks like we also have a little bit of a higher low formation for Coinbase with some higher highs for the stock as well. So you got some higher highs and higher lows. Right now, right at that higher low, sitting roughly at 150 down to as low as 110 for Coinbase. Caddy, what are your thoughts on transitioning investments away from semis, AI plays to software solution? That's where the value will be in the long term. SOUN, GTLB, TEM. So there's nothing wrong with that, Frank. I think absolutely one can consider transitioning away from, semis and artificial intelligence to more software solutions. It just depends on, what your time horizon is, how tactical you want to be, and just your overall conviction level with respect to semis and AI versus software solutions. So, for me, like if I'm bullish on AI, but I'm also bullish on, let's say, software, then that can be a bit of an addition to the existing portfolio that I have. I may not necessarily transition away completely from from semis and AI over to software, just because I think that, that has more value or that has more potential. So I think that's definitely something that one can consider if you want to be more tactical and your time horizon is not that long, because in the short term, medium term, it's possible that semis don't really do anything. They've already gone up so much. They've kind of pulled forward on a lot of that growth. So it's possible that, Nvidia for the next year basically consolidates sideways, doesn't really go anywhere because a lot of that future growth is priced into the stock. So we see a lot of consolidation, similar to what we've seen for Tesla over the last 3 years. Tesla had a very massive run up to over $400, but last 3 years, down 50%, pretty much traded sideways. And, we haven't even seen 300 in such a long time. So it's possible that Nvidia kind of goes through something very similar as growth rates start to come down. And that's exactly one of the reasons why I think the wheel strategy is going to be so lucrative, because premiums are high, stock's not really going anywhere, it's just been trading sideways. So it makes a lot of sense to be looking at trading options while you wait for the price to break out of its all-time highs and start this new cycle of momentum higher. So, but long term, I do believe that I think artificial intelligence, semiconductors are going to be incredibly important. they're already very important, but that importance, the level of importance, is going to continue to increase over time as there's going to be more, compute power required in the future. There's going to be more chips needed to power all the amount of data, the vast amount of data that we have in the world, as well as a lot of autonomous driving and IoT and 5G services and everything that's going to be needed over the next 5 to 10 years out. So short to medium term, I think semis, AI have for the most part run their course. It's possible that they do consolidate sideways a little bit. You can see that SMH is at the same level as it was back in March of 2024. So it's already been a good 6 months or so where it hasn't gone anywhere. It's gone down, gone up, and then gone down again, back and forth. Although you can also make a case that it's actually making a little bit of a head and shoulders, which could lead to a potential breakdown. So left shoulder, head, and then a right shoulder where a neckline sitting right there at 199. So it's possible that it breaks down eventually below this level and takes some time to recover back up. Okay, thoughts on Google here. So I like Google, Thomas. I think Google is trading at a level which is very attractive. Already starting to break down from this area of support, and the next level is going to be down at 131. However, I do not believe that Google could be down over 31%, but it's a possibility, right? Even though it's a low probability outcome in my book, it's still a possibility that it's down over 32%. Okay, let's see. Okay, thanks. I use SPY to compare the movement of the market. What exactly do you mean by buy rights, selling covered calls? Yes, so what that means is I would buy the stock first, and then I would immediately sell calls against those shares. So that is buy rights, meaning that you're buying and then you're writing calls against those shares immediately. The reason I would do that is because I already have shares on Nvidia at 108. And if I do buy at 108 again, it doesn't really move my cost basis all that much. Ideally, I should have bought yesterday, but I didn't have the buying power that I do yesterday, right? So if Nvidia, for whatever reason, was, let's say, trading down to 105 again or 106, then what I would do is I would really just compare the difference between a cash secured put strike, like the premium that I would receive by selling a put, versus the premium that I could receive by doing a buy right. And whichever one is higher, I would pretty much end up picking that for the most part. Although there is some level of risk, that analysis that needs to be done, where if you're doing a buy right, you're actually owning a share. So there's underlying shares that could go down, and that could be that unrealized loss. With cash secured put, yes, the premium is going to be lower, but you're going to be able to manage that position a little bit better as opposed to doing a straight up buy right. So again, as the portfolio is growing, I also have to be very aware of the position sizing. I don't want to, trade 10, 20 contracts on Nvidia. That can be like 1,000, 2,000 shares. It's going to be very, very big, right? So right now I can do that because the portfolio size is still relatively small, but as it gets bigger and bigger, I'm going to be starting to layer it out between different strikes, different expirations, and different stocks as well. So, and you'll see that in the portfolio updates over time every week, and how that's growing and what stocks I'm actually trading on a weekly basis. But next one, I'm looking at Google. I'm looking at Tesla. So those are two that I'm really interested in. Google for selling puts, Tesla for selling calls. And then I'm also looking at Meta for selling puts. But I really need it down in the 470s before I can start considering to sell some puts here, because I think 470 is going to be a pretty strong support. It's already going to be down 15% from its all-time highs. So that's going to make for a pretty good deal for premiums that I could receive for selling those puts on Meta. So those are the few that I'm looking at. Amazon also, but mostly from a call perspective, given that it's, pushed up very well. I think where I want to own Amazon versus where it's trading right now, the premiums are not going to be that much. So not going to be looking at Amazon from a put standpoint. So Palantir, we've already covered. Tesla calls or puts today. So mostly looking at Tesla calls, but not for today's expiration, but at least a week out, or at least up to as much as a month out, but not going as far as the robotaxi event, because I think that Tesla can easily get past 250s, or even possibly up to 270s by the time robotaxi gets around. So that's going to be this level right here. And the last thing I want is have my shares get called away during that robotaxi event rally, and then Tesla breaks out to over 300 or 350 or new all-time highs. Then I will be crying in the corner with my missed capital gains while you guys make fun of me. So I don't want to do that. I'll be very careful. I'll most likely go way out of the money, even if that means like getting premiums down to like 20 cents or 30 cents. That's okay. But the last thing I want is, like I said, my Tesla shares getting called away. So don't want that. I already had my Tesla shares called away, but I was okay with those shares because I was already very overexposed to Tesla from the beginning. Okay, so let's see. I think the company is just fad. It won't be around. Celsius. I haven't looked at Celsius in a lot of detail. You know, there's a few people that are very interested in that company in our community. So I may do like a little bit of research into Celsius and, you know, if there's any potential there. But put premiums are pretty good. Like I showed you guys, 1.3, 1.4% for just 3 days. Return on collateral is attractive. But rule number one, don't sell puts on stocks that you're not comfortable holding for the long term just for the sake of the premiums. So don't chase the premiums. Focus on high quality businesses and the premiums will come. Okay, let's see. Will Supermicrocomputers still do the 10-for-1 stock split? Yes, I think they're still scheduled to do that, right? Or is that already happened? I think they're still scheduled to do the split as reported in their, I think their previous earnings. Okay, what are your thoughts on ELF on these levels now? So let's take a look. ELF Beauty, I've done analysis. Wow, quite a big breakdown here for ELF. I would say the next support sits down to $86. So that would be the level to keep in mind for ELF. I think fundamentally, this is a company that was growing. I believe it's still growing. We got some decent margins. I think a pretty good balance sheet also. You got about $195 million of net debt. So more debt than cash on the balance sheet, and total shares outstanding also pretty stable. And then if you come over to the valuation, yeah, so 6 times sales, 58 times earnings, and over 146 times cash flow. So very, very expensive stock. And this right here will go ahead and turn this level into a resistance for ELF Beauty. And the next support, next target's going to be down here to as low as $86. So that's going to be that level to keep in mind. What would be the best covered call for Palantir? It depends. If you're comfortable letting your shares go, you know, it depends on your time horizon. So, but if you're okay with, you know, getting rid of your shares at a certain price, I would look at $40 to $45 strikes for Palantir, because that is still going to put you away from about 29 to 30% potential capital gains, and the premiums may not be that much. You know, premiums may not be that high for Palantir, but that is at least going to make sure that, you know, you don't lose out on your shares. If you're comfortable, you know, at these levels, if you've been holding Palantir since $6 or $8 and you're okay with letting go of your shares, then I think $36, $37 call strike is also decent. But that's the art of picking a strike, right? We've covered this extensively on our options course, where you want to be very careful with the strikes that you're picking, both on the put side and on the call side, because that's really what's going to determine how that trade goes. So a lot of things matter, right? So what might be a good strike for me may not be a good strike for you. You have to analyze that yourself to try to figure out, okay, where am I comfortable getting rid of my Palantir shares? And if I'm not okay with getting rid of my Palantir shares at all, then I wouldn't sell a call at all. I'll just hold on to the shares and not do anything with it. That's what I'm doing with Tesla, right? I mean, I could be selling some pretty hefty calls here and be making like, you know, a couple grand every month on Tesla, but that there's always that risk of having your shares get called away. And after 3 years of consolidation, after 3 years of trading options on Tesla, like I feel like now it's at a point where it's ready to break out, right? There's a lot of tailwinds. Interest rates are coming down. Interest rate cuts are going to happen very soon. So the last thing I want now is, before the rally begins, before the breakout happens, to lose out on those shares. So very, very important. You know, if you want to hold stock long term, just forget about options on those, unless you're going way out of the money. But otherwise, just keep it simple, buy and hold. Revisit the story every few quarters, and see how you can capitalize on that momentum. Okay, InMode is finally taking off. Let's take a look. INMD. So let's take a look. Down up over 6.6%, so not bad. Nice little breakout. well, not really a breakout, but it's been trading in this sort of, falling wedge for a long time. So, you can make a case that, okay, we're still well within the falling wedge pattern here for in mode. Resistance is going to stay put at $18. So that would be a level to watch for in mode. Okay, let's see. Fubo. Why buying ETF at all-time high is fine, but not individual stocks, since ETF is made up of an individual stocks. So JT, that's a great question. And the reason for that is because of volatility. And, I showed you guys the chart for if you are down 50% on a stock, it takes 100% return in just for you to break even. So individual stocks are more volatile. They've got a much higher beta, and they're more susceptible, or more vulnerable, I should say, to bankruptcy risk than an index. So, and I think it's important to identify, JT, that all-time high is a subjective, very relative term, right? All-time high doesn't mean anything, right? A stock can be undervalued trading at an all-time high, and a stock can also be overvalued trading at an all-time low. So all-time low, all-time highs are just very, very inaccurate or misleading terms. It doesn't tell you anything. If you tell someone that I bought a stock at an all-time high, right off the bat, something goes off in their mind. They're like, oh, you probably overpaid, or you bought a stock at an all-time high, so you're probably, the stock must be overvalued. But like I said, just because it's all-time high does not make the stock overvalued. Just because the stock's oversold, or in other words, all-time low, doesn't make it undervalued. So I think it's really important to recognize that. And so can generalize that question or the answer by saying that, okay, all-time high is bad because I don't know the stock or I don't know the price. But in general, what I would say is that individual stocks are more volatile. They've got higher beta. So if you are buying at an all-time high and the stock, let's say, drops 40% on you or 50%, then the recovery is going to be that much difficult. Versus an index or an ETF, 15 to 20% is possible, but that's still well within the contained range of how much over the long term it can recover back up. And again, historically also, indexes, ETFs on a 15-year rolling period have been profitable. Any rolling period, any 15-year period, had you invested and then you waited 15 years, you would have made money. Any 15-year period. I don't think you can say that for any stock out there, because no stock has been around for hundreds of years. I think, that might actually be an interesting study for us. Maybe that's something that I can look into in another video. What's the oldest traded stock in the market? And has there ever been a stock that has given us a 100% profitable return on a 5-year, 10-year, 15-year rolling period? Right? For example, Tesla, 3-year rolling period, very brutal over the last 3 years, not doing well. PayPal, over an 8-year period, it's doing really well. It's coming down to the same level from back in 2017. So, you can't make the case for those stocks here. But I think it might be an interesting video to do some research on that and try to figure that out. Okay, what do you think about AMR? Premiums are on sale but still high with earnings in November, which is winter time when coal will be more in demand. So when it comes to commodity stocks, just be very careful because they tend to be very, very volatile, right? So we've talked about Southern Copper, trades on copper prices. We've talked about gold miners. We've talked about Bitcoin miners. We've talked about materials, and see 248% rally there, and then a significant decline of 56%. So they can be very, very volatile if you're trading commodity stocks here, because they're essentially priced off of the prices of commodities. So it's kind of like a derivative where it's deriving its value based on an underlying asset, which is the commodity itself. So if you're trading coal or stock that mines coal, or stock that actually mines, whatever oil and gas company or materials or whatever commodities, just be careful of the volatility because it can be very, very high. Do you usually use stock screeners to find long-term opportunities? If yes, could you elaborate? Well, for the most part, I look at the MoneyVest Index for more general ideas of the risk and reward. And then when it comes to individual stocks, I look at our own platform as well to better figure out the MoneyVest score, the M score, to figure out, okay, if that stock needs more analysis from me to better figure out whether it's undervalued, overvalued, or whether it's high quality or not. Anyway, so let's see. Markets are open now, guys. Everyone, folks, Nvidia is trading at just under $108 right now. We've got Tesla down to under 220. Nasdaq here, QQQs are up over 39 basis points, with S&P 500 up to 548, so up over 35 basis points. Type in 1 for RIP, 2 for DIP. Let us know what is your expectations for the markets today. If you're expecting the markets to rip or dip back down. So 1 for rip, 2 for dip. Let us know what is your expectations from the markets today. Nvidia back over $108. Once again, it's going to be flirting with my cost basis as it has done all week. Last week was kind of crazy. It was like big drop on Tuesday, Wednesday, Thursday, Friday, trading pretty much flat sideways in and around $108. And then Friday, of course, the big sell-off once again, trading back down to those levels. Okay, we got lots of 2s coming in. Here we go. Looks like that call is going to get in the money very soon here, given how much the volatility is on Nvidia. Just a little bit under $109 right now. Oof. I'm still up. I'm slightly down on that call, 20%. So I could roll it out, considering the premiums are going to be even better now at $108, $109, but we'll see. If I can get a credit for this week's expiration on Friday, I would definitely do that. So let me see if I can see what the premiums are for this. Nope, it's still a debit right now. I wouldn't be able to roll it out for a credit. $109. No, it's probably gonna be, it's already in the money. Anyway, so we got lots of 2s right now coming in. Nvidia with a massive pop, back up to over $109, up over 2.6%. So incredible. Is it touching 110 today, folks? 110 for Nvidia today. Is it happening? Am I gonna get in the money again for these calls? And I should honestly be selling puts right now for Google or for Nvidia. Should have already been doing that. Premiums are not going to be that great though. Such a green day. What are we thinking? Tesla 225, 230s, Nvidia 110s. Is that where we're heading? Wall says 110 for sure. Oh man, if it ends up closing at 109, big party. Big weekend party. Saturday, Sunday live stream. If Nvidia closes at 109. If Nvidia closes between 108 and 110, we'll do a weekend live stream. We'll do a live stream on Saturday and we'll enjoy. We'll have fun. If Nvidia ends up closing between 108 and 110, which is a very, very rare possibility, but it's possible. So what do you guys think? Between 108 and 110 for Nvidia on Friday. How many people think that is possible? How many people think in the chat? We got almost 400 people watching. I really want a lot of engagement, a lot of participation from all of you. What do you guys think? Leafy says, with drinks. Yeah, I'll be drinking some sparkling water. But we'll have a party if Nvidia ends up closing between 108 and 110 by Friday. Knowing you, it'll happen. It's possible, man. It's possible. Nvidia has just been playing games with me all last couple weeks. It's been so all over the place. Charlotte says 107.90. That could also be a good price, but that would be a good price too. That would be a good price. I guess anywhere between 107 and 110 is fine, because my cost base is actually, you know what? Anything between 106 and 110 is fine, because my cost base is 106 right now. Adjusted cost basis on Nvidia. So, distilled water. Apple, let's take a quick look. If the markets do rotate back lower today, my plan is to sell more puts. Actually, Apple puts might not be bad. Let's see what the strikes. Let's see what Apple puts are giving us. With white wine. So, okay, let's take a look. I'd be comfortable owning at 200. 200, we got 10 cents. Nothing. Maybe next week is going to be a little bit more. We got 43 cents. So MAG versus VUG. So I would prefer VUG the leap. MAG seems to be very expensive in terms of its cost and fees and everything. So I wouldn't be super interested in MAG. Possible. Ty says impossible. I spent $108.75. 109 from Breezy. Yes, everyone, please make sure to drop a like. Alfred, thank you so much for reminding everyone. I would really appreciate that. And Thai 106.60. That would also be good. Just the cost basis down in the 106, so not bad. Do you look at European stocks as well, or just USA? If you do, could you please look at Volkswagen share price and technical analysis? So yes, we have a European channel as well. I think it definitely needs a little bit more attention. I haven't been able to spend time on that, but we have looked at a lot of European companies in the past: Novo Nordisk, Louis Vuitton, Hermes, just a lot of luxury items, as well as other companies that Airbus, a lot of European big names, Rolls-Royce. We've done a lot of analysis on those companies. But let's take a look at Volkswagen. What is the ticker symbol? So it's going to be, I believe, this right here. Oh, it doesn't look like it's that one. Let's see. VOW, is that the one? Looks like it. So down 2.6%. Let's take a look. A lot of consolidation for this company. I've never been a Volkswagen fan, even from a consumer standpoint. German. So we got a little bit of a higher low, I would say, for this company, and maybe another steeper higher low right here. So definitely trading down to a support, and another support is going to be down at 67 euros for this stock. So if it ends up like breaking down from this, then the next target's going to be down at 67.25 for this company. Here we go. Nvidia back down in the 107, 108. Man, the call is going to be jumping all over the place here. So we'll see how Nvidia trades. I mean, there is still a possibility that it ends up down, quite considerably from these levels. I mean, it's possible that it comes down to low 100s, or possibly in the 90s. And I think that's something that everyone has to be prepared for. Like, I really want everyone to be mentally prepared for Nvidia to be in the 90s, for markets to continue to pull back. Because look, last week was brutal. There was no signs of any strength. There was a lot of weakness, no buyers, no bidders. Nobody stepped up to buy up the market. And yesterday, yes, we had a strong day, but one day does not make a trend. So it's possible that, that was kind of like a bull trap setup, and we continue to resume that selling pressure. If we do, great. That's going to be buying opportunities. Money Invest Index is going to drop down further. Volatility is going to be higher, and we can start deploying cash once again. If it doesn't, then for the most part, I am invested anyway. But just want to be very careful that Nvidia is volatile. I mean, it can go up, as we know, 5, 10, as much as 15% in a day, and even down that much. So back under $108, starting to sell off. So here we go. Those calls are still out of the money, and we're doing well. We'll see where it closes the week by Friday, where it is. How much Nvidia will be by the end of this year? I guess nobody has the answer to that, MS. I couldn't tell you. Even if I try to make a prediction, I know I would be horribly wrong. So I'm just better off trading it on a day-by-day, week-by-week basis instead of trying to predict where it's going to be. Yeah, the Money Invest Index turning green already. I mean, it was down to, 3.55. That's where it was. Anything under 3 is when it's going to start turning green for us. We're not there yet. Every time the markets gap up green and then they start selling off intraday and we pretty much turn red, reminds me of that meme from South Park where I forgot what his name was, but he goes to the bank to deposit his money that I think his family gave him or grandma gave him, and the banker goes, and it's gone. Kind of reminds me of that meme because it's such a funny, the whole show is so fun to watch, but that particular scene, of course, turned into a great meme, and I always share it in our Discord, always. And the gains just get wiped off from the market. Apple selling off. Let's see. Apple here. Yep, down over 1.6%. Market cap still over 3.3 trillion. So not a big sell-off for Apple as of yet. I really want to have some live streams where, we just play some music, we just listen to some music, and then we can just like look at the markets and do some analysis and stuff. We're gonna set something up, maybe once or twice a week. We're gonna make it more chill, and we're not gonna look at so much data because I do feel a little tired, honestly. End phase, so we can come take a look at end phase here in PH. So a lot of consolidation, obviously does not look great from a technical perspective. Just been trading sideways for a really long time. Support level is going to be down here at $90, $92. Vibe stream, yes, we should do a vibe stream. So that's going to be that support level here at roughly $96, $97. Resistance all the way up to 124. I'll be looking at end phase puts as well for next week. So Enphase, Google, Tesla, Nvidia, those are the companies that I'll be looking at from options standpoint every single week. In mode, look at that, up over 9% on the day. So incredible momentum here. Background music analysis, get some more sleep, man. Yes, I've been just traveling so much that I've not been able to sleep all that much. Anything's possible, but with your luck, I know, right? I don't know. Volcar, where do you see Nvidia in 5 years as an investment standpoint? So 5 years, yes, I think there's potential for Nvidia to grow further, as long as of course the margins stay intact and their dominance in artificial intelligence continues to be there. Professor Demodron's got a fair value of $86 as of today. If you assume that he's looking at least a 12% discount rate, then price target wise 1, 2, 3, 4, 5. I mean, he'd be expecting 151 as a price target 5 years out. And I've done some analysis on Nvidia in the past using our platform. So you can come over here, take a look at Nvidia, come over to the case analysis. You can also figure out your bear case, base case, bull case for Nvidia. Your price target, your intrinsic value, all those things. And even for me, I think the price target sits somewhere between 140, 150. I mean, I would love to see it in the 200s, but at that point, you just have to understand the market cap is going to be very, very large. I mean, we're talking $4 to $5 trillion in market cap for the company. And that can be a pretty big number. There we go. Nvidia breaks down below 107 now, and those calls are once again profitable. There we go, up 17% again. There's so much volatility on those calls. I was like, yesterday I was up 48%, then I opened up down 25%, and now up 17%. It's all over the place. But I really should be selling some more puts. Cash is just sitting on the sidelines right now. Yeah, need to sleep more, definitely. Anyway, so that's going to be it for today, everyone. Thank you so much for joining us. I really, really appreciate it. Make sure that you drop a like, subscribe to the channel if you haven't already. And definitely do join us if you want to get access to all the options portfolio updates, options alerts, everything is going to be available. S&P 5300, the market bottom. I agree. I think that 5300 is the level that we're watching. Although on the technical chart on the 30-minute time frame, we got our first support at 5400. And then of course, if we do, let's say, breaking down below this level, then 5200 is a possibility. That's where I could see the markets finding a bit of a bottom right about there for the buyers to step in. So again, thank you so much for joining, everyone. Really appreciate it. Tomorrow's live stream is going to be very special because we got inflation numbers coming out. So CPI at 8:30 a.m. Eastern. I'll be live at 8 a.m. to make sure to tune in to take a look at the market's reaction live in the morning.